Cheers. Not a bad drop, that one.
That's pretty good, isn't it?
Very good.
All right. Well, welcome to Small Caps. We've got a special interview for you today. It was a bit unplanned for, but Rod was popping in, and we're going to have a conversation anyway. And we thought, well, you might as well listen in and see what we've got to say. Now, Rod, you've got some. Well, welcome first of all.
Thanks very much, Philip.
To Small Caps Towers.
Good to be here. Thank you for the nice red wine. It's very nice.
You're welcome. And now you're making some calls about the stock market at the moment.
Yes,
it's
been really interesting in the last few weeks because we've seen the market gain quite a bit of momentum. The volumes have started to pick up quite significantly, and I thought there's a real chance here that we could test the previous all-time high, which for really nearly 12 years we've been waiting for that, because the last time the market reached its all-time high, would you believe, was the 1st of November 2007, when it got to 6,873.2. So we've been taking a long time since then to work our way back. And of course, after the market had its correction back in 2007, we went from that level down to 3,109 in 2009. And then we've worked our way back up through 4,000, 5,000, then 6,000. But of course what we've had in the interim has been a whole sort of cascade of perhaps poor government in Australia. We've had way too many prime ministers, which has created a lot of uncertainty. We've had interest rates in the earlier part of it, during the GFC, that were quite high. And of course there was a lot of uncertainty up until May this year about who was obviously going to govern Australia.
Yep.
So basically what's happened since May is a lot of the uncertainty's been removed, and we saw the results for the first half of the year come in pretty well, with 93% of companies reporting higher earnings. Coalition government got returned, so that took that uncertainty out of the way. Companies are paying dividends and increasing their dividends. And of course what we've seen as well is 2 interest rate decreases, which has brought the cash rate back to 1%. So what it does for investors is it doesn't leave them with too many options, because if you're chasing yield, you're not going to get any cash. So it's bringing more people back into the share.
You've got to chase the market to get your returns.
Got to chase the market.
So what do you think with that though? Like, I agree with what you're saying 100% about the reasons why it's had the decline, but I think overseas we've seen similar things, but those markets like in the US,
yeah.
I mean, I've never seen the country more divided and stuff going on, but they seem to be going...
But interestingly enough, when you look at the Dow Jones as to what level it's increased to, didn't seem that long ago that the Dow Jones was 10,000, and then it got to 15, 20, and then now it's at 27,000. But what's happened in America is, over the last few years, we've seen unemployment come down. We have seen an improved US economy, which has helped. Of course, the current president, Donald Trump, would probably claim that he's helped to engineer that situation. He's obviously wanting to get re-elected next November in 2020 for another 4 years. So I think he is going to, as a very clever businessman as well as President of the United States, he's going to look at what needs to happen to keep that stability in America.
Yeah.
Because one of the key things that he will be asking people will be, are you better off today than you were 3 or 4 years ago? And if the answer to that is yes, there's a very good chance maybe they'll re-elect him.
Well, that was the Bill Clinton code. Was it? It's the jobs stupid.
Well,
like,
that's
if
right.
they've got jobs, like people are happy.
If people are in jobs, and if people have got businesses that are improving and growing, and people can take a few holidays, people have got a bit of spare cash.
They're happy.
They're happy.
They're not going to change. People don't want to change if it's working out well.
Exactly.
And I think America's done really well, because like you're saying, because they've had 8 interest rate rises under Trump, and the economy's still doing pretty well.
The economy's still powering.
Like, I mean, depending on how you view the market, I agree with candidate Trump more than I do with President Trump, because I think he was calling out a lot of the figures in the Federal Reserve, but I think he's been pretty smart about it recently, because next month we've got the next Federal Reserve decision, and it looks like they're going to cut.
Yeah, it looks like a cut. Yeah.
And they were talking about raising it, but I think Trump's been pretty smart about it, putting the heat on the Federal Reserve, basically saying that if the market drops or the economy drops, it's on them, which, I mean, pretty fair. I mean, they've raised it only 8 times. They kept it at 0%.
Well, for a long time
under Obama and that. So it seems like what you're saying in terms of where the economy, the stock market's headed, it seems like central banks are looking to keep lowering rates.
Yes.
And there's even talk of that we might see next month in Australia as well.
Very possible. I mean, there's a few schools of thought on that front because we're at 1% now. I think we may see one more, which might bring it down to 0.75 of 1%, but others are saying could be 0.5. I mean, if that happens, there's absolutely no doubt in my mind that more money will come into the share market. So, you know, the fact that our share market really stalled for a very long period of time, over the last 12 years, it really probably should be a lot higher, but it hasn't for a whole range of reasons that we just talked about before. And in history, because I've been around for a while and I've seen actually 4 booms and busts. My father was a stockbroker for 40 years and I invested in shares for the first time at the age of 9, so that's a while back.
A
few years ago. But I've seen and I've studied how markets have moved from leading up to the top of the market in, say, 1980 when the index got to 1,000 for the first time, and then and the resources boom that occurred in 79, 80, and then through to 1987, which was a defining moment where the market got to, you know, 2,260 and then dropped 50% overnight to 1,650. That was a very defining moment because basically you lost 50% of your investment overnight. We've never seen that before. Then from 1987, it took until sort of 2001 when we had a lot of technology stocks coming in and the beginning of the internet and the investment there. And of course we saw the dot-com boom, and then we saw that market reverse as well. Then we took a period of time from sort of 2001 to 2007 to get up to that all-time high of the All Ordinaries Index of 6,873.2. Then that fell off the cliff in that November 2007, and then the market dropped. But in this instance, it didn't happen quickly. It happened through to March 2009, when it bottomed at 3,109. And of course, that's when the bell should be ringing at the bottom of the market, signalling to investors, this is the time to buy.
Get back in.
But the scary thing in some ways, and something that investors have got to be really conscious of at the moment, is that because we're getting to all-time highs and the market's powering up, a lot of people come into the share market for the first time and they've got no idea of what level it came up from. So then the question becomes, well, how much higher can the market go? Well, there could be another 20, 30 or 50% increase above the current level.
And when do you see, that's the next question I have for you, is where do you see the market going and what sort of time frame do you think it's going to keep rising? Because you're obviously predicting it's going to...
Well, I think, and I've been sort of...
This is not investment advice,
actively canvassing that the share market will get to an index of 7,000, and I think that's probably going to happen sooner than we thought. Originally, some months ago, I thought if that happened before calendar year end, that'd be good, but I actually think it's probably going to happen a lot sooner. And if we get another interest rate decrease as well, to 0.75, 1% in Australia, more money will come into the share market. So realistically, somewhere between sort of 7,500 and 8,000 by calendar year end could be achievable. I think that's a real possibility. And if companies continue to maintain, improve their earnings, increase their dividends, it will all get back to how companies perform. Ultimately.
And we've got results coming out at the moment, right?
We've got results coming out, so if
it'll be interesting to see.
It'll be interesting to see how they go, but the expectation is from the first half to the second half, things are still pretty solid. And I suppose you've got to say, if you're working in an environment with low interest rates and you can't make your business work, perhaps there's something wrong. Even though lending has toughened up, we've had the Royal Commission, we've had all those sort of issues, but if you can't make money in this climate with low interest rates, which will continue for some time yet, something's wrong with your business, isn't it?
Money's never been cheaper at the moment.
Money's never been cheaper, that's right.
Which kind of creates a scenario, because obviously the money flows around, a lot of it's hot money, speculative money, which obviously that can be used for making capital purchases or investments, but it also can be used just to, cheap money finds places and it can turn into a hot market. So do you see, as this rally, as you predict, it continues, like when do you see it peaking and perhaps having a drop-off?
I think we're going to see our market continue to increase this year, 2019, and into 2020, at least up to June 2020. And then because we've got that US election, I think you're going to find that the President of the United States is also going to look at how he needs to shore up things like the China trade war as well, and he'll want to try and do a deal with China, try and settle things down on an international stage, which will, be a good setting for him to give him the best chance of being re-elected in November. And that will mean that potentially the Dow Jones will continue to stay at its level or rise, which will then be a good backdrop for us as well to continue to rise. So, but I'd say into 2021, or end of 2020 into 21, we'd have to be looking at it very, very closely. And I suppose it gets down to, what end of the market you're investing in. And I think too, it's always good if you've got money invested, for long term, in the top end of the market, that's a different story. At the small cap end, you've always got to be prepared to take a little bit off the table.
Small cap end's where it's at.
It's where it all happens, exactly. But it's easy to buy in the small cap area, but it's very hard to know when to sell, because no one ever rings a bell at the top of the market and says, right, time to get out of there. But I often get people who say to me, look, I'm in this stock at $1.80 and they're now $16, what should I do? And I look at them in the eye and say, look at my eyes. It's really saying maybe take a little bit off the table, because you don't want to see those stocks end up, halving or at worst coming back to the level that you invested in. A lot of people panic because they think, oh, I'm going to have to pay this massive tax bill. But the old adage of better to share a profit with the tax man than a loss with yourself. And over the years I've been involved, I've seen many people hold on to the shares and they come back to the level they pay or less.
I think we've all been there too often.
We're all good buyers, we're not good sellers, are we?
Well, you don't go broke making a profit either. So, everyone claims they want to get the top and the bottom. You just never gone into
it. And I could pick some stocks and mention some, but I don't want to upset some of the CEOs of those companies. But there's some classic ones that literally have gone from sub $1 up to $20, and you'd have to seriously be considering taking a little bit off the table.
At least your initial investment, just to kind of...
If it turns down, and we get a lot of people short selling, those sort of companies too, at different points in the cycle, and you don't want to be on the end of that either, do you?
True. So with, I agree with what you're saying with the US. I think Trump's always got the election shooting. It's his to fumble, basically.
He's a tweet away, though.
How exciting is it? I wake up and you check it, and he's like tweeting about something. It's
it
like
could be something bad, you just don't know, do you?
But it's so exciting. But actually, I think people like, because at least it's honest, where you know what you're going to get. Whereas I think with a lot of the politicians, like if Clinton had got in, I think the market would have been screwed. Day one would have been at war with Russia. This whole Russian collusion thing's a joke. But anyway, that's another story.
And of course, we've got North Korea that's gone very quiet. We don't really know what's happening there. Interestingly enough, one of the things that's always fascinated me, particularly with China and the US, is obviously China and the US are competing now at much more of a level playing field. America's still the biggest economy in the world, but China's very close.
I think they're going to take over soon, right?
I think it's only a couple of years away. And China has cemented itself, as a significant player and power in the world. So we can't underestimate that.
Well, that was actually going to be my next question I was lining up. So, obviously they're very independent, interconnected economies, so they rely on each other. China owns a lot of US debt. But where do you see, because China seems to be slowing down, it seems like they're pumping a lot of liquidity into their market as well. Which seems to be a global theme. I want this on record as well, because I've been saying it when they were talking about we're going to put rates up. I'm like, no, you're not. I think central banks around the world are going to keep cutting rates. They're going to eventually go back to quantitative easing. There's even talk of that here in Australia. But in terms of China, what do you see happening there? Because it seems like their economy is starting to slow a little bit, while it's still at high growth rates.
Still good GDP level. But yes, I think...
Which obviously impacts us a lot, that's why I'm asking.
Well, it does, and any economy that grows as quickly as China has, and that emerging sort of middle class of 400 million people are becoming wealthier and obviously looking to invest all around the world. But I think it's purely weighted numbers. When you've got a population as large as China's, you're going to have your slowdown periods, but they're not going to slow down for too long because they're very big consumers. And the one thing that Australia has been able to take advantage of, but needs to take a greater advantage of, is our positioning in this region, because we're in the Asia-Pacific region, and Australia's in the same time zone, and I think there are a lot more benefits there where we can provide a food table, potentially on some manufacturing areas as well, and innovation, technology. Australia's got a lot to offer in respect to that, because we're in the same southern hemisphere and time zone. and China, can benefit enormously, from that. And we've got a lot of Chinese students being educated here because we have a fabulous education
This
system.
whole building is all Chinese people.
All Chinese, yes. I noticed that when I was sitting down the foyer there.
Yeah.
Pretty much all of them coming in and out were Chinese students. But what a great thing, they're sending their children here to be educated, and they're obviously, at universities here, and in some cases looking for jobs here as well. So I think that's not a bad thing. We're part of that Asia Pacific region, but yet our alliances and allegiances in the past have been to Europe and America.
Yes.
But that's a long way away.
That's one thing I've always wondered. I'm like, why are we so, like, as soon as the US does something, we just kind of like follow whatever they do? It's kind of like, well, China, these Southeast Asian nations, I don't know if you saw there was the IMF report, was it IMF or World Bank?
Yeah, World Bank.
Basically talking about the future growth economies, and it's clearly Southeast Asia. And obviously, like you're saying, we're in a time zone, we're very close, geographically. We need to be maybe more aligning with them rather than kind of just...
Well, it's interesting because about in 1996 I wrote a book called Shifts of Wealth over 5 centuries. Now, this is my first book. Shifts of Wealth over 5 centuries. They should be. But
get them on Amazon.
Get them on Amazon. Shifts of Wealth over 5 centuries, and it showed how over 500 years from the original Habsburg Empire, the rise of Europe and Britain, to be the major dominant country in the world, then Japan, then America, and then since probably the late 90s, the re-emergence of Asia and the whole region here. But the thing that was so clear to me was that we're in that region, so we need to benefit from it. And the growth that's occurred from sort of the late 90s, where, part of the Asia Pacific region and all those economies have improved enormously. That's where the 100 years of growth is going to be over the course of the next period. And I suppose the backdrop to that is that, that means the US and Europe, take a bit of a backdrop, in respect to that. And all the stuff going on about Brexit and all that. Maybe it doesn't matter if the powerhouse for this 100 years we're in now is in the region that we're in. So this is where Australia really needs to benefit.
Yeah, well, I think it's a pretty obvious shift happening from west to east at the moment.
Yeah.
And, I'd be keen to get your thoughts on how we can benefit from it, because I think one obvious thing that we've covered a lot in small caps is you've got Russia and China buying gold like you wouldn't believe.
Yep.
Meanwhile, Britain, Australia, we're selling our reserves.
Yes.
I don't know what the hell's going on with that. But it seems to be like as well, like the Australia's relied, the top 20 stocks in Australia has been banks and mining companies. And it's been that way for about a day. So, we're forecasting this growth in our stock market. Is it going to be the same old companies, or do you see something else coming through?
I think you're going to see other companies emerge, particularly in that resource sector as well, because Australia still has massive resource ability and capability. Largely, a lot of it's still undiscovered. Look at what's happened, just recently in Victoria, where a Canadian group a few years back, Kirkland Lake, came in. And have now got access to 3 million ounces of gold in Fosterville, north of Bendigo. So, of course, a whole lot of other smaller companies are realising there's more gold there.
Yeah.
We just need to dig a bit deeper, which is what they're doing. And you're not having to go down a long way. You don't have to go down kilometres. You're just going down a few hundred more metres and you're finding more gold. So there's an enormous amount of resources there. And then agriculturally, Australia, particularly where we've got water, we can supply massive amounts of food to Asia in the cattle industry.
Well, that's a huge one that they're all getting into, isn't it? Is it forest and...
they're all investing in all that. But I think what's happened is that it's got to be economies of scale. So a lot of those businesses have got to work out how to cooperate together as opposed to trying to do it themselves, because you need scale. So if you're in agriculture, you need to be scaled up. So you need to, if you're an Angus breeder, for example, of cattle, you need to aggregate with others, because if you do, then you might have 10,000 or 20 or 30,000 head of cattle that you can then package up, Chirovac and send into Asia. So we've got to get a bit smarter about how we do it. And I think that's going to be where there'll be a fundamental change. Because you look at other countries in Asia, for example, saying we're in Asia Pacific region. Singapore, for example, has no natural resources at all, but it has, its IP is people. Yeah. We're lucky we have natural resources here. Still, a lot of which is untapped. So I think a lot of governments in Australia too have got to realise, let's look at those opportunities and work out how we can benefit from them. Perhaps not always take the view of trying to stop, further development in respect to that, and that might be for soft rock development through gas and oil, and then hard rock as well through the mining side of it. We've got to work out how we can do that, because a lot of companies now are forced to do the rehabilitation and comply, to very stringent levels on the mining resource side compared to 100 years ago.
Yeah.
But yet,
well, especially here in Victoria.
And in Victoria, there are a lot of people who try to stop it from happening, but we can't do that because we don't want someone to come in and take it all from us, do we?
Yeah, well, I think we're very lucky. It's interesting you say that, though, because obviously we are resource rich and we've benefited from that. But I feel like eventually that might run out. We need to kind of look. Well, I think we've missed the tech boom.
Yeah.
We had a very good biotech sector, but
yes.
a lot of that's getting bought out.
Yep.
I just feel like Australia's kind of missing the boat on a lot of opportunities here. Like we could be doing, I think we're doing great, but we could be doing a lot better
we could lift the game.
Yeah.
But I think a lot of that, it's got to be through government support and incentives and subsidies.
Just drop the tax rate.
Well, drop the tax rate. That's the easiest thing to do. But in Singapore, they spend between $5 and $10 billion to help entrepreneurial companies grow through government, because they realise we haven't got any natural resources, so our people, we've got to back our people and we've got to support them. So,
well, a country that did that very well was Israel back in their tech sector.
Exactly.
Their tech sector is world class. Like, I mean, how many IPOs have we had on the ASX, which are Israeli companies?
Well, that's right.
And another country that's doing, I was living there for a while, was in Chile. They're very big on entrepreneurs, whether they're coming there or they're locals.
Yes.
The government's funding them, offering them support.
Yep.
And I feel like Australia just kind of, I don't know, the government wants more and more money, they're expanding, but it's like, what the hell are you doing to give back? Like,
well, we've got to incentivate those companies, and even you go back to like the Sarit orbital engine, companies that are
the one in Perth,
Sleep,
I've heard of this.
And a lot of these companies,
is it legit or is that
Atlassian, there's so many companies that have been Australian based but have internationalised themselves.
Yeah.
But we don't want to lose them. We've got to be much more supportive of them. And there's quite a few now, that are listed in small cap companies in Sleep, for example, which is the last sort of frontier where you've got diet, exercise and sleep. You've got to unlock, the ability for understanding how people sleep, and that company can internationalise itself. Or companies in that space as well. Yeah,
no, I feel like there's great opportunity there, and like you're saying, I think the government could be doing. I don't want to say more, because I feel like they need to do less. Get government out of the way a little bit, get the red tape out of the way, stop trying to tax everyone so much.
Yes.
And people will stay on shore. Because I think what's happening now is they see overseas markets and they're like, well, bugger this.
Well, it is tax. I think it all gets down to one word, tax. We
drop
need
it to 10% flat across the board.
Flat, encourage people, because otherwise people work out ways. They have clever lawyers, clever accountants, and they work out how to move it offshore into other parts of the world where it's going to benefit them more than here. And why would we do that?
Exactly.
Sense.
And this is the weirdest thing, is like generally the middle class and the lower class wants tax, but it's actually the middle class and the lower class that gets taxed, well, especially the middle class, because the wealthy people know how to evade it.
Yes, that's
and
right.
if you're taxing these entrepreneurs, I'll throw myself maybe in that category a little bit, or people that are high net worths, they're not going to employ people.
No.
Like if you start increasing their minimum wage or doing these things,
that's right.
First thing I do is go, sorry Johnny, I have to fire you, I can't afford you.
And one of the biggest employers in Australia is small business. There's 2.5 million small businesses.
Yeah.
There does need to be greater incentives too, because you're taking the risk in running your business.
100%. It should be supported.
You're the one at night, Philip, that's waking up thinking you've got to pay the light.
I'm not sleeping. That's why I drink the wine.
I've run my own business now for 15 odd years, 16 years, and you do worry at different stages of the cycle. And what you've got to do is keep reinventing yourself. Every few years too, don't you?
Exactly, and I think the government could be doing more. Even something like the ATO, those guys are working harder than anyone. But they're going after anyone except for the big corporations. It's like if you want to get the tax money, go after these Google, Amazon guys.
Not the low-hanging fruit, not the people down here that are sort of beavering away trying to eke out a living.
They're like, oh, Philip, we saw that you went to the car wash 5 years ago. Can you prove that? I was like, come on.
You didn't keep your receipt?
No, unfortunately. I'll video record it from now on, so I've got proof.
You have to, don't you?
Equipment. Yeah.
Exactly.
But speaking of the boom cycles and whatnot, you've developed a bit of a...
Yep.
What would you call it?
Well, this was the investment clock, which has been around for a long, long period of time. Actually, first came out in the London papers. The Evening Standard put this out, and I remember seeing it in the early 80s, and it was a black and white copy because we didn't have colour in those days. And I thought, that's interesting. There's a budding sort of stockbroker, and I thought, that's interesting. Cycles, the whole bit. So then I sort of repurposed and redeveloped the whole thing. and then wrote this book.
Added some colour.
Added some colour to it, and actually colour and movement, because on our website it actually is an interactive clock, so you can move the dial around and actually tells you where it is in the cycle. And it's up to debate. Not everyone agrees totally.
Well, what's the website before you go?
So www.bourse, B-O-U-R-S-E, communications with an s.com.au.
Right. We'll put a link in the description below.
And there's an interactive clock, and you can move the handle around. It'll tell you what will happen in various parts of the cycle. The thing that had me stumped this time round was that in 145 years of share market history in Australia, every time the market had peaked and dropped to its lowest level, it would then rise to its all-time high and go past it. And in this cycle, that has nearly taken 12 years, which is unusual, but it's certainly bringing us into what I would call the boom category here.
So what time on the clock is that?
Well, I think somewhere between 10 and 11, so we've still got a bit of time left, but this is the thing. This could be the fuse that's lit, and you don't know whether the fuse is a long fuse or a short fuse, because what happens in the boom cycle is you do see stocks rise at levels way above perhaps their value.
Yep.
PEs go out the door. I've heard analysts over decades say, oh, don't worry about the PE, don't worry. Well, at the end of the day, you still have to worry about the fundamentals. If a company isn't growing or improving its earnings, its share price is coming down. Eventually, that's right. So in that part of the cycle, between sort of 10, 11 through to 12, we've still got a bit of time, but we're not where we were in 2009 when the index was 3,109. We're getting close to 7,000 now. So we've got to be very careful at this top end of it. But there's still profits to be made. But as I said, in both sectors, whether it's at the top end, top 50, top 100, or at the small cap end, I think you've got to be a bit more prudent to let a little bit go off the table and take a bit of profit.
Yep.
Be prepared to share it with the tax man, rather than
take it to the tax man. If you can avoid it, do it at all costs. They don't need more money.
It's fascinating, and it just always in history it does show you what will happen in the future. And I was very concerned about this until just recently, when we did get to the highest intraday level and then the highest closing level, which was last week. And then today, we've ended up powering up to sort of 6,911. So we're moving towards that 7,000 quite quickly, which to me is indicating we're probably going to go quite a bit higher than that.
Yeah, well, looking at I'm a bit of a chart guy, and this is not financial advice by any stretch of the imagination, but it does look like it's going higher. But I do feel like largely...
That's the one that I think is most interesting, because it shows where the market peaked in 2000 and then where we bottomed, which was March 2009, and it basically showed that we had the opportunity to make all this gain, which has now occurred over the last 12 years. So if you had have invested at any time in 2009, you're picking up nearly 100% of your gain now, because we've just reached the all-time high level again.
Yeah, so just if you can't see it, it dropped about 50, almost 52%?
52%.
Correction. Now, look, obviously you're never going to get the bottom, but we're just to highlight, obviously it's recovered, and it does look like it's going to go higher. And like you said, I think a lot of the things to do with the central banks, and look, the rates have been lower. They've gone negative interest rates. They're going to do it again.
Almost the stars are aligning now. Go back, 6 months into last year, we had massive uncertainty still, didn't we, about what was happening with the US, what was happening with China, uncertainty in Australia, where interest rates are going to go, whether they're going to go up, whether they're going to come down, who was going to govern the country. I mean, that was the biggest uncertainty we had, because we didn't know. And then, the biggest surprise happened. The government got re-elected. No one was really expecting that.
But do you know what's strange about our... it does help when there's stability, but when one of our prime ministers get overthrown or whatever, it's happened a couple of times now. I remember I rang John Beveridge.
Yes.
John
Beveridge.
And I'm like, we should cover this. It's going to have a big impact on the market. He's like, no, it won't. I'm like, what are you talking about? Like, if that happened in the US, the markets would be going wild. Whereas here, I think we ended up for the day or something.
Well, exactly, that's right. But look, to me, it always gets back to, with financial markets, no one likes uncertainty. So when something hasn't resolved itself, like who's going to govern the country, at least once that happens, then you know how you can deal with it. So we had virtually a 6-month period from sort of late last year where the market wasn't looking to crash hot. Businesses were tough. I mean, every business was finding it hard. And it wasn't until sort of May, when the election occurred, government got re-elected with a majority, and we thought, right, okay, we've got certainty here. We know pretty much what they're going to do. Hopefully, they'll do some clever things, support small business, lower taxes, all those things that we want to see, Philip.
Yeah.
Since that time, the market has started to, pick up quite a bit, and it really has only been in the last couple of weeks, as I said, the volumes. You've got to watch the volume of the market, but it's the weight of money, isn't it?
Yeah.
Super funds have got a lot of cash still. Investors can't go for yield unless they invest in shares. But the one thing they've got to remember too is at the top end, in the top 50, top 100 stocks, for yield, you've got to be conscious of the fact that if you put 100,000 in and you might be getting 4, 5 or 6% yield, what would happen if you lost 20, 30% of your capital? Because when the market turns at some point down the track, and I'm thinking that's still a way off yet, into potentially 2021, that's when it hurts, when you lose your capital as well, because the yield doesn't matter then. No one wants to lose their capital, do they? Whereas in cash, you don't lose your capital. You get a return, but at the moment,
they inflate it away, but you don't technically.
But you don't get much of a return at the moment.
Correct.
In cash, do you?
No, 100%. And I'd like to talk with you in a sec about that downturn. But just before we get to that, you're right. There's people chasing the yield in the market, but we're also seeing gold, which obviously produces no yield, at all-time highs.
Yes. Over 2,000.
We called it on small caps. If you're not reading it, why not? You could have made a fortune.
Should be.
We called the breakout on silver and gold, and it seems like it's pretty much like people are going there to kind of a bit of a safety, and they're devaluing the currency. It seems pretty obvious. I think it was Kyle Bass many years ago was speaking with, who was it back then? They had the other Federal Reserve chair.
Paul Volcker?
I think it was after him.
After him, okay. Try to remember.
Doesn't matter. Yeah. They basically said, look, they can't guarantee the purchasing power of the dollar. Basically saying that if worse comes to worse, they need to keep the economy going.
Yes.
They're just going to keep lowering interest rates and flooding money into the market.
Yep.
Which, if they've said it and they've kind of hinted towards it, I think that's where it's eventually going to go, which is going to drive. This is just my opinion.
Drive commodity prices up and gold.
And the share market.
The share market.
But my question to you is, well, A, what do you foresee for gold? Because obviously it is at all-time highs, but it doesn't fit that yield.
No.
Well, if you can answer
I just think people like to have a bit of gold as an insurance. And yes, it often indicates when it goes up that people are a bit concerned, a bit uncertain world. And generally that's sort of a precursor that down the track things may turn a bit pear-shaped. But at the end of the day, I'd be looking very closely at all the gold stocks, particularly the juniors at the small cap end, because at this level, it makes it very economic for them to raise capital and then commence mining if they get all the approvals, because the normal cost may be $600 to $800 an ounce for recovery out of the ground. So at 2,000, that makes it very economic. Yeah. And the thing that will be exciting will be the potential for new discoveries, because I remember one of the most exciting things that happened to me when I worked as an analyst in broking was when they found the diamonds in the Kimberleys, which was Ashton at the time, and that was just phenomenal. Now we have a world-class deposit there, which Rio Tinto eventually took over, producing some of the most amazing diamonds. So you'd like to think in Australia there's still plenty of other potential for other finds in different areas. But gold is particularly attractive, and look, they're still finding lots of gold in Kalgoorlie, in the Tanami, in other parts. I mean, people are finding gold nuggets, for heaven's sake. I mean, every week there's a story.
I feel like I had to be there instead of here.
So I think you get out and do a bit of prospecting. You might be lucky you could find a gold nugget.
I've seen some of those guys, they're doing pretty well.
Well, there was a guy the other day, it's a $200,000 nugget. He found it on a beach.
Oh, really?
It was unbelievable.
Whereabouts?
In Queensland.
Oh, really?
I don't know how a gold nugget would end up there, but it was fascinating. But even in and around Bendigo, Maldon, Ballarat and Bendigo are two of the biggest gold producing fields ever in Australia's history in a world context. And people forget that the economy in the 1850s in Victoria was built on the gold rush from Ballarat and Bendigo. And probably half the city of Melbourne left to go to Bendigo and Ballarat. And then it was even that important, they even set up stock exchanges there. We had a Ballarat stock exchange, a Bendigo stock exchange, because people left Melbourne, and of course Melbourne became known as Marvellous Melbourne. We were rivaling the world. We had some of the tallest buildings back in the 1850s, the most spectacular buildings, we had lifts for the first time. So, we have that potential, to revisit a renaissance if we can find more resources, which we have. And
well, that Victoria, I think that's going to be a huge one once they find. I think they'll eventually find something similar to what they've got with Kirkland.
Kirkland, it's amazing. 3 million ounces of gold, that is worth billions of dollars.
But as the price keeps going up, more of them become economical as well.
That's right.
It's very.
And there's lots of little small companies in and around that area that are well worth having a very close look at.
We've got them on small cap, so Google it. No, don't Google it. Search it on the website, you'll see it. Or Google it, you'll find it.
They're the ones to have a look at. Insurance there.
100%. I've been a gold and silver bull for the longest time just because I'm betting against the central banks and the governments. Because this is my next question, is I feel like I 100% agree with what you're saying. They're going to do everything they can to keep the markets going.
Yes.
Obviously, it relies on profits and that. But if the property market drops here, they're going to do whatever they need to get it going again.
Right. Which is generally lower interest rates, really.
Lower interest rates, first home buyers grant. We'll relax now the foreign investment rules and everything they need to do. But what happens if and when they do all these things? Markets at all-time highs, rates are at almost 0%.
Yes.
And then what happens if the wheels still aren't spinning?
Well, that becomes a real problem because you've got nowhere to go. You've got no ability to go anywhere. And we'll get to a point at some stage in the cycle where things will reverse. But I still think that's still a reasonable amount of time off. And in that cycle, rates are probably going to have to start and come back up. And there will be future recessions because history has shown us that as well. But we're in, I think, a really good period of time. It's probably going to be different in the US and Europe compared to Australia. We're still in that 100 years of growth here. So we might be able to protect ourselves if we get a bit cleverer with how we deal in the region as opposed to the problems that Europe is facing, and also the US as it suddenly realises that it's not going to be the most powerful country in the world in terms of the economy for the next 100 years. They've had their days of sun.
Well, how do you feel they're going to play this out? Because it seems like obviously they've been dominant. There's an obvious shift going away from the US towards China and these other countries that are trying to get off the US dollar. I don't know if anyone else has noticed the coincidence of anyone that tries to get off the US dollar gets invaded. It's pretty obvious for whatever reason they give to the media, to the public. But it seems like the US is eventually going to lose its status as a reserve currency.
Yes.
The IMF, the IMF or the World Bank's already gearing up for it.
World Bank
with the SDR. China basically got themselves into the SDR basket by announcing their gold reserves. Once again, I don't think they're fully announcing their full amount, but regardless, they're in there. And it seems like once the US loses the power they've got now, how do you see them that transition occurring?
Well, I think America's really pushing hard to get manufacturing happening again, because irrespective of what you look at, the US has a very powerful consumer, a very wealthy consumer, out of its total population. So that's a powerhouse. So if they can get manufacturing going again there, and this is why there's been a bit of a war happening, with China and other countries as well, because I think America doesn't want to lose that totally. And of course, one of the big things that we can't lose sight of is that wages costs in the Asia-Pacific region are rising. They're rising in China and in other economies in Asia as well. And of course, there's been a move out of China for manufacturing into Vietnam and other places as well. So you can see that cost structure changing quite dramatically for businesses. If they've got a much higher wage bill. So China, I think, is going to be facing a few hurdles as well, but because it's got a growing economy of middle class still, in the order of 400 million out of 1.5 billion population. That's a very powerful consumer to grow, whereas America's population in the 200 millions has got a large consumer base.
They're kind of peaked at their...
They're peaked, I think they're peaked, whereas China hasn't. And you really don't know what the real GDP figure is in China, but it's certainly not going to halve. It might come back a bit, but it's certainly going to continue to be very credible 4, 5, 6% GDP.
Yeah, nice. All right. Well, life's too short to sit on the fence. So, what are some predictions that you've got for coming up in the stock market? And if you want to go broader than that,
look, I certainly think we're going to see the All Ordinaries Index go through 7,000 quite soon, and probably end up by calendar year end 2019 somewhere around 7.5. If it powers on, which it could, because it has in the past historically, if you go back to 1980, 87, 2001, 2007, the market has lifted anywhere between 20, 30, 40, 50% from that previous high. So if we see that, that's going to be a very powerful market here. No one believed 4 or 5 years ago that the Dow would end up at 27,000.
Yeah,
we've been lagging. That was pretty amazing. There is a very strong likelihood, based on the current position, that Donald Trump will be re-elected president, I think, for another 4 years, barring any major tweet that comes out that offends people or some other information.
I reckon he could do a bunch of them.
There's always a chance. There's always a chance of that. And we can't underestimate the power of China, and particularly Russia, because those economies, from the Cold War days and from the early days of China. I always remember the quote by Napoleon of China about when the dragon awakes, the rest of the world, in some ways should live in fear. And that in some ways is playing out. Interestingly enough, Xi Jinping is now hereditary ruler of China. So that makes him a bit like the emperor, really.
Yeah, right.
And we have other leaders in other countries around the world that are sort of behaving a bit like that as well. That creates a lot of volatility, which can turn on a dime or turn on a dollar, which can change expectation, outlook, and all that. So I think
black swan event, kind of.
A black swan event, and that can happen, and it can change people's expectation. It can change people's positivity. So we've got to be conscious of that. But we're in a boom phase of the share market, particularly. We're in a zone where you've got to be very, very careful and cautious, and keep your head while all those around you lose theirs, because you'll be hearing analysts saying, as I said earlier, P's don't matter, don't worry about the ratios too much, this company really could double. Well, always try and put a fundamental analysis on it and take a little bit off the table, because I've seen it happen so many times before where you can lose some big dollars of your portfolio. No one wants to have a super fund with several $1 million and lose 40% of it. They really don't.
No one wants to lose full stuff.
No one wants to lose anything. So I think Europe, you're going to see Brexit, I think, ultimately sort itself out.
I can't believe it hasn't happened yet. What's going on there?
It's going to take until October, I think, for things to get resolved.
Has it got Boris Johnson in now or something?
Boris is now Prime Minister, and there's a bit of volatility there. But that's it. We do have volatile leaders running major countries around the world. They're quite volatile. They're unpredictable. So that can mean that things can change.
Keeps it exciting, doesn't it? You don't know what's going to happen next.
But Europe again, I mean, the economies of Europe, it's hard to power those economies, in this climate. It does get back to, as I said earlier, the region we're in, the Asia. So my prediction is that we're in the 100 years of growth in the Asia-Pacific region. We are so lucky we're in Australia for so many reasons, because we're resource-rich, our population's not too big, we've got plenty of fresh air, sunshine, and we produce products that are genuine, that the rest of the world wants. We've just got to get a lot cleverer about it. And I think that's really the future, for us, which should be pretty rosy, providing we don't have people trying to stop us doing that. We need governments to provide greater incentives for us to do that. And we will become a significant, country in the world, albeit small, because it's very hard for us to, end up with a population of a couple 100 million, unless we can work out how to put water in the desert and, and so forth. But it's a pretty exciting time for us, really.
Yeah, no, I agree. And I think entrepreneurs always create the future, so if the government can do that, it'll be nice and rosy.
Absolutely.
So, well, thanks for joining us, Rod. I think what we'll do in the future is we'll see if your predictions came true. We'll get John, we'll hold you accountable. We've got it on video now.
It's all on video now, so
there's no turning back.
Keep the fingers crossed.
Yeah. Well, thank you very much for joining us at Small Cap Tales, and we'll see you guys soon, and we'll see you soon as well.
Thank you. All right, good on you.
Cheers.